All right, so thank you so much. Today's topic will be time frame, candlestick part one, support and resistance part one. We're going to look at channel, we're going to look at trends, and we'll look at levels. Okay, so let's buckle up and start work. All right, so I'm going to share my whiteboard quickly. Let me share my whiteboard first so that we can do some work there quickly before I share the chat. All right, so can we see the whiteboard and react if you can see the whiteboard? All right, thank you so much. So let's start with time frame. Okay. Now, what is time? Time is time. All right. But then time is actually a period within an occurrence of something. Okay. An occurrence of something. So in trading, we are trying to understand interpretation of market behavior, what market is doing within a specific period. I don't know who is writing on my, well, we are recording and you are writing on my screen. See my problems why I don't like recording. You have nothing to do on my chat. That is actually the truth. Okay? Right. Now, within that specific period, what is market doing? Then, within that specific period, what do you think market will do relating to what market has done, right? So we come together to link time frame to how the market form. And one indicator we use to identify or read how market is formed, helping you to understand price interpretation, is the candlestick. All right. Now, we have candlestick that goes with time. We have bar chart that goes with time. We have a line that some way, somehow aligns with time. Okay. Now, in this case, time will be fractionalized or categorized into maybe two or three different layers. Layer one will be what market is doing every minute packed together, or every seconds packed together to give us a minute, packed together to give us an hour, packed together to give us a day, packed together to give us week, months, 3 months, and goes that way, right? So that is the first when it comes to time frame. Now, another aspect where we'll consider time is when market opens, how market opens. So we're going to fractionalize both of them. Now, within the standard price movements according to time, and then the standard time market open and close. They have some integration, and then there are some expectations you will get as far as those time is playing their role. Now, let's take it from the drawing aspect, where we normally draw something like this for you, something like this. Okay, let me use yeah. So we have something like this for you and something like this for you. All right. So let me just make it cornerless. Right. So these two lines I am drawing here is something we use to see this way. Okay. So basically, we call this candlestick. Okay. Now let's go back to a little bit of tradition of old days when we used to light candles. All right. We used to light candle. And in the candle, there is a yarn. Okay, many people say rope, all right, but then it's thinner than rope, so we can call it a yarn or thread. So basically, there is a yarn or a thread, or you want to call it a rope, no problem, within the candles, and it melts. There are points in time where you are going to buy the candle, and probably it is already more handled and it break. And as it's broken, or you bought the candle and then light went off, and you probably want to use two candles at two different places. So you break it into two, right? You can see that there is that yarn or thread inside. So that is just a concept of how the normal candle looks like, right? Now, there are some of the things we consider to the real life activities and things we do. Like, for instance, I'll be mentioning something like the harami candlestick pattern, which is a Japanese word. It means pregnant, and we have something we're going to do with that. We have a candlestick called hammer. We all know hammer in our houses. We have a candlestick called doji. We have a candlestick put together called morning star, evening star. We know when it's morning, what happens. When it is evening, what happens. We are going to put all this together and relatively understand financial market, put all these principles together and make money. Why do we teach you all these things, guys? We teach you because you cannot rely on trading signal for a very long time. That's number one. Number two, you need to always, one of the easiest way to lose money in trading is to follow trading signals. Yeah. You don't know how to follow trading signals, you will still lose money, right? Because don't forget, some signals passes through four generations, five generations before they give it to you. Somebody gets it from somewhere and he also copy to one platform. That person also copy to another platform. That person also copy to another platform. That person copy to another platform and it now gets to you. So the signal is given maybe 10, 15. And by the time the signal gets to you, it's 10:30. And by the time you see it, it's 10:50. How do you know if that signal is still valid? Simple question. You have an answer. So you need to know some of these basic things, right? So some of you might not want to go into details that much. I know the level I'll get to for you. Those of you that want to go into deep, you want to, in fact, some of you even want to learn trading and have an academy. Some of you want to learn and teach other people. Some of you just want to become professional traders. We all have a level we are going to put this knowledge in, right? So the candlestick have two major things, but more. One, these two areas. Okay. So we are going to represent these two candles for two things. Okay. One opens below and closes above. Right. The other opens above and closes below. First thing, keep it in mind. The one that opens below and closes above is a buying candle, okay, or a bullish candle, okay. The one that opens above and closes below is a bearish candle, so bearish, or a selling candle. Now, the distance between the body, sorry, the distance between the open and the close is the body of the candlestick. So we are just like we are doing skeletal system right now, where we are looking at some of the stuff. All right. So the distance between the open and close is the body of the candlestick. Note that. Then we have this thing over here and this one. All right. We call them the shadow of the candles. All right. So you can also call it shadow. You can also call it the wick of the candlestick. And at the bottom too, the same. Now, on the buy or sell, we have highest price went to, we have lowest price went to. Okay, so if you are considering a buy candlestick, the distance between the close and the high gives you the wick or the shadow. The distance between the open and the low give you the shadow or the wick of the candlestick. Then if you come to the bearish, the distance between open and high gives you the wick or the shadow of the candlestick, and the distance between the close and the wick and the low gives you the wick or the shadow of that candlestick. Now, the next thing you need to know about candlestick is the size of the body in relation to the length of the wick or the shadow determines the name of that candlestick. Note this down. So the size of the body is the distance between the open price and the close price. So that size in relation to the length of the wick, either above or below, determines the name of the candlestick and the purpose of that candlestick. Give me a thumbs up if you are getting it so far. And let me know you are getting it so far. There's a thumbs up. You are getting it so far. All right, thank you so much. CS is getting it so far. So at least one person is getting it, so I can continue, right? So determining the name of the candlestick is with the body. So I'll just mention some random names for you. And then on the version 2, when we are going to do combination or putting together candlesticks, candlestick patterns, I'm going to put all of them together. So you have candlestick like Marubozu candlestick. We have Doji candlestick. We have Hammer candlestick. We have Dragonflies candlestick and many others. We also have putting them together to get a pattern of candlesticks like Harami candlesticks, engulfing candlesticks, tweezers, morning star, evening stars. We also have candlesticks that communicate the reversal or turning of the market. Tells you that, okay, market sold and it's not going to change direction from selling to buying or buying to selling. Candlesticks also help you identify every activity happening in the financial market, then communicate what you need to do with price. So basically, if you want to be a successful trader, before you go in for all the numerous strategies in the world, and then probably talk about if they are real or not, please try to understand the basic communicator. I also call candlestick as the basic communicator. It's like learning the alphabets. It's like understanding numbers from 1 to 0 and putting those numbers with mathematical concepts to develop every other thing you need to understand. And that is how important candlestick is. So if you spend time to understand this concept very well, you can read the market, project the market, predict the market, and make a useful decision at the end of it. Very, very simple. Okay. Now, I want to try to make it simple for you. Yeah. Now, we have color codes. Before then, you will normally see white and black color codes. Now we have green and red. Normally it's green and red. So people use green to represent buying candles and people use red to represent selling candles. But on the other side of it, you can also develop your own concept. Maybe you decide to use blue to determine the buying candlestick or the rising candlestick or the rally candlestick, and you decide to use yellow or gold or the drop candlestick or the selling candlestick or the bearish candlestick. That is actually up to you to decide and use. And whichever way you want, the most important thing is the body, the opening price, the closing price, the high price. Then some strategies also focus only on candlestick, where you're looking at them considering the median price of the candlestick. Now, communicating in candlestick will help you make a fruitful financial decision, regardless the assets you are trading, be it crypto, be it commodities, currencies, stocks. We have price interpretation. Candlestick will offer, right? So that is it for candlestick. Let's talk about support resistance first. I want to touch base on everything. Then we go to the chat. We look at some of them. Then we can call it a night. So we're talking about support and resistance. Okay. Now, the first problem of support and resistance. Okay. So I am maintaining the problem first before I give you the solution. A lot of people will say that support and resistances don't. Please do not unmute your mic for no reason, so you don't distract me. So now, why do people think support resistances don't work? And I have reasons for it, and they sometimes might be right. Okay, but what is support? What is resistance? In real life, when they say you resist something, what does it mean? When they say you support something, what does it mean? All right. Basically, those concepts, is it the same? Can you apply that same concept in the financial market? It's just like explaining demand and supply to someone in the ordinary market and the financial market. That this one, it doesn't really make sense to me. It's just like you explaining cryptocurrency to somebody who is extremely traditional and some way somehow is okay with fiat currency. That's the same thing we have here right now. Now, before I tell you, I want you to look at this word "and" with all. Okay. So our first if pronunciation and then putting words together will be cause of our problem. Then why would we use the right word or at the right place, right? So the word that will change your mind is OR, support or resistance. When you understand it from the point of or, then you will not draw a beautiful line waiting for price to come and respect it. And when price did not respect it, you get angry that it did not. Right? So let's go into a little deeper. At the support areas or support and or resistance areas, we expect possible reaction of price at those levels. So it means that before you can consider something being support or resistance, support and resistance, you first need to know where and how to spot a level. In real life, what is a level? In your life, do you have levels? Do you have at a point where you can look back and reflect and say, between this period and this period, I didn't live my life well, I want to fix it? That could be level. Some historical things that happened to you in the past and they happen to be a recurring. You hear people like, oh, I'm asthmatic. Anytime it's August, I had attack. So once August is coming, they're expecting attack. And they start putting measures in place. It would be considered as level, right? So if we take level into consideration, then how do we spot levels? We're going to look at that in the chat, right? We're going to take it technically, theoretically, and apply both together. So a level will be considered as a previous reaction. So if price reacted here before, what is the probability that it will react here again? So we can say that price reacts over here with a high probability of reacting here again, meaning market sold at this particular point, and we are expecting that market could sell over here again. So if we are expecting that market could or may sell at this particular area, then we are probably expecting that area to act as a resistance. So in a nutshell, we expect potential sell at resistance. We expect potential buy at support. But support can become a resistance, and resistance can also become a support. That is why it's best to say support or resistance, so that your expectation will be based on a reason. So the concept of rainy seasons, especially in my country, right? So the last time it showers around January 8th. And I know a lot of people in Ghana will be wondering, it's not rainy season. Patterns has changed. Climate change, our attitudes, and every other thing changes things around us, the wind direction, and the rest. So if you have that concept and um, from the meteorological team, they told you it will rain this particular day, and you are at a place where you always fight for water, right? You always fight for water. Then the little water you have, because they told you that it's coming to rain, then you went to throw all your waters away. You saw the cloud formation, conventional, then the cloud formed, then the rain didn't fall. That's the point. The rain didn't fall. You already threw your water away. You are just among those people who will tell us that support and resistances do not work. Right? Now, it's a preamble for you to grab the concept and understand where I'm coming from. So, before you see a confirmation that the plate is converting from whatever to whatever, there are certain things you need to see. And that thing you will see could communicate, let's say we are expecting this area to be a support, and we are expecting this area to be a resistance, and price is coming. How price is approaching this area should tell you that it will reject price. Just like you want to cross the road. I don't know of East Africa, but then I think I asked before. In Ghana or in West Africa, we want to cross the road, we look left, right, and left again, then we cross the road. Why we look left again is because the left is the closest. The vehicle coming is closer to you from the left. Now, is there a time you try crossing the road? You take two steps in crossing, they're about to cross the road, and you take two steps back because you look at the velocity of the vehicle approaching you, say, let me come back so that this car can come and pass. I tried that this morning. And you do it in your life every single day. Once you are going to cross the road, why? Because you don't want to get knocked down and die. Same as trading. So sometimes you will spot the direction of the market, but then the market didn't give you an evidence. No, let me just wait. This car should pass by first. Let the next car come in. I want to assess it if I can cross the road. Now, if you are crossing the road and you get to the middle of the road, those roads that have dual carriage, they only have a center line. So you realize that, okay, after I cross from the left, I might not be able to cross straight to the right, to the other side of the road, because the vehicle coming from the right is also approaching. Then you stop at the center of the road. And the market use the same methodology every single day. So when you stop at the center, let's say it is not dual carriage, and you manage to stop at the center. Then in Kenya, where there is motorbike, in Uganda, there are motorbike, Nigeria, motorbike, and the motorbike is coming. And then with the speed and the cars passing by from the right hand side, you see that there is a reason to go back and cross-check the road again and cross. We do that in real life. Tell me I'm lying. Okay. Now, these are practical concepts you need to know about the financial market. So it is not a static market, it's a dynamic market. So you don't come and draw a very beautiful, well-aligned lines and be expecting that this is my resistance, this is my support. So compulsorily, when price get to the resistance, I want the market to sell. It's not your house now. It's not your market. You are not the one controlling it. You are just sitting in your house comparing, communicating, doing business, transacting with other millions of traders in the world. And you don't know when somebody is sending $10 million to Japan. And you don't know when somebody is moving $10 billion from Japan. So because you don't know when those transactions will happen, you need to understand that anything can change. So the fact that you spot it expecting a resistance, you should also have in mind that that resistance can fail. So it is not compulsory that when price gets here, it should sell. Very simple. Now, what are the things you need to see when price is approaching a resistance? Let me say it from the top. So you see things like bearish Harami candlestick pattern. So after the class, I'm going to send you guys a candlestick Bible and a couple of videos on candlestick for you to watch, right? So you see bearish Harami, bearish engulfing candlestick, right? We're going to look at all these ones when we dealing with the advanced aspect of it. You'll be seeing tweezers, so tweezer tops, tweezers, yeah, this way. Be seeing tweezer tops. You'll be seeing things like dark cloud cover, dark cloud, candlestick patterns. You'll be seeing things like inverted hammer, and many more. Okay, confirming potential resistance or validating a resistance. Now, there are some times you will see these things and the market will continue inching. So you have to define, okay? You need to define a reason, okay? Or have a confluence. Anytime some of these things present themselves, then you are good to go. Because of this, we can also see complex candlestick patterns. Complex candlestick patterns. Or we see complex patterns like the N pattern, the W pattern, the head and shoulder pattern, the head and shoulder pattern. We could also see things like extended M. So we will not see W at the top, we see W on support, right? Sorry for that. We also may see things like evening star formation. Yeah, couple of stuffs. Then on that of support, we will be expecting things like we'll be expecting on support. Right? So on support, we'll be seeing things like hammer. We're seeing things like bullish, engulfing. We'll be seeing things like bullish harami. We'll also be seeing teaser bottoms. So everything we have here is just the opposite. We'll be seeing tweezers and we'll be seeing something like piercing line, right? Piercing line and many other. Okay. Now it could also happen that they will not form. So you also need to define some rules. If those rules fail, then what is this market trying to do? Then complex candlestick patterns come in again. Where you see things like morning star and the rest. You need to also identify communicating and turning point candlesticks, which I will mention most of them and show you in the course of the session, right? Now, when you guys, let's focus on the teaching and I'm mentioning it, so focus and read it, right? Please. So when you understand some of these things very well, it then helps you know if the place is a support or the place will be a resistance, right? So these are things you need to understand. I'll be going to the chart very, very soon. So we grab the concept very clearly. Now, the next thing we are going to look at for is channels. Okay. So I consider channels to be like gutters. Okay. So I consider channels to be like gutters. Something like this, something like this, something like this, or something like this, and then something like this. So when the market is moving, we could create a guide or a guard, any of them. So the concept of collecting rainwater, or uh, drainage systems, something to pave way for the water to flow. You can use that concept, right? So that's why I said I always consider it as a gutter sometimes. So when we say a gutter, water flow through the gutter, and there's a probability that the water will spill based on the pressure the water is traveling with, right? So in trading, when the market is moving, we sometimes connect some coordinations to be able to know, okay, what is making or what is price respecting in this particular area. So when price is actually doing something, I just draw here, we can say that, okay, price is moving on an up channel, giving us an uptrend. Okay, based on how it is behaving, which we are going to look at the highs and lows coordinations, we'll look at that. Price can also be deciding to move in this way and then be going up like this. It's also a sideways channel. So price is actually respecting a certain level up, a certain level down, but then it's moving within this particular space, but it's neither going up or going down. It's going up or down. So when the market is doing any of these, will tell us what name we are going to give it and then what we expect from happening. So connecting this point very well can give you and introduce you to what we call patterns. We'll be looking at patterns, and under patterns we will have reversal patterns, we will have a continuation patterns, and these things will help you to make some couple of decisions to be able to know, okay, market sold for a couple of days, couple of hours, couple of months, and it is now time for it to what, now change direction. For example, when BTC was falling from 105 down to 89,000, patterns actually help me know exactly how it will happen, right? And then if you understand putting these patterns together very well, where we'll be looking at pattern separations, we're looking at putting patterns together, all right, and then dissecting them to be able to know if what you are actually seeing is what it is, so that you can be able to make the right decision. Now, the right decision doesn't mean that you will trade without making losses. Some losses is definitely going to be part. But if you're able to make at least 50% win, all right, with a proper risk to reward ratio, 1 to 2 risk to reward ratio, I can assure you that you're already a good trader, right? So when we get to risk management, we'll break it down a little for you to understand a couple of stuff and how you can stay in this industry for a very, very long time. Now, for us to leverage a little bit on trends, channels as well, we have a pattern with price always move. Okay. So let's say market is moving from this particular point to this particular point, then it comes to this particular point and move to this point. So we connect it this way. Price is doing something like this. So price is actually creating a low and a high, and then the low it created seems to be higher than the previous low, and then the high it created seems to be higher than the previous high, and then it continue like this. We will connect this one and said this happened to be an uptrend, right? Now, for it to continue being an uptrend, there are a couple of things we integrate where we introduce you to the Fibonacci principle or the Fibonacci concept to be able to know where there's retracement, where there's a potential reversal. You can use trend lines to based on communication. Then you can put in candlesticks to be able to know what price is doing at this particular point, and then handle it with that move based on good money for yourself. Now, on the opposite side, you will see it doing something like this, where the lows become lower and the highs also become lower, right? That also means we are seeing a downtrend. Then we also see it going either sideways, same level, which we'll consider as a consolidation or a ranging market. Now, we are saying that the best time to trade is when the market is in a trending mode. The best time not to trade is when the market is in a consolidation or a ranging mode, depending on the type of trader you want to be or you are, right? So basically, this is a very simple concept, but I always tell my people that when it comes to drawing, everybody can draw very beautifully. When it comes to seeing it on the chart, oh my goodness, that's another work on it, right? So let's go to the chart real quick, and I'm going to use a trading view to share. Then we talk about a couple of candlesticks quickly. Then we close. I'm trying to make my East African sleep on time. All right, so basically, we have something like this, and I'm going to show you a couple of candlesticks. Can you please see my screen? If you can see my screen, just say yes. Yes. Can see my screen, say yes quickly.
Yes,
Right, thank
please.
you. All right, great. So you can see my screen. So when you look at the candlesticks, you can see that the green and the red. So these are the red ones. Okay. So let me annotate them really quickly for you. So we have red, 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 green, 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 green. Then you can see that there is some couple of information I want us to. Over here, you can see that we have the red candles being dominating. Then the green candles are not dominating like that. So you can see that one red candle came and swallowed about four green candles. This is just to let you know that the selling pressure is high. So at that time, somebody who is seeing this place as a support will be disappointed with this candlestick. At the same time, somebody who thinks this area is a resistance and expecting a sell will be disappointed with this. Most people will say support and resistance don't work. But if you understand the concept of how the candlesticks communicate, a support actually worked here where market bought all the way to this level. And resistance actually worked here with the double confirmation where market sold back to this. Then we don't respect that support again, right? So we're going to look at all these things. You understand? And you can make some good decisions, right? Now, when we look at the candlestick, you can see that all the candlesticks, there's some relationship between them, but they don't look alike. For example, you look at this candlestick here, the lengths of the wicks are not the same. The top wick is shorter than the bottom wick. If you also look at the next candle, its formation on the body side is not the same. And it play through. And all these candlesticks have names and what they signify and what they communicate to you. They have names. So if you know one name and its purpose, you may even focus on that single name and its purpose and make good decisions for yourself. That is candlestick 5. Very interesting topic, and I hope you will give it all your time, understand it, blend it with other approaches, and you are good to go, right? So looking at this particular area here, you'll see this red candle and this green candle. The red candle is smaller than the green candle. We can see that the green candle swallowed. When we put it on it, the green candle swallowed the red candle. We will call this particular two candlesticks a bullish engulfing candlestick. And it signifies a change in direction from a sell, giving you an opportunity to buy. So you get the second candlestick. So this green candle, this next candlestick must close bullish, give you the opportunity to buy. If you follow this, that means you are probably buying from the next candle, which is like 10 a.m. today. You'll be in a buy and be holding money in profit right now. Okay. Now, when it comes to illustration, yeah, some way somehow it looks very easy, but when it comes to applying it in real life, it's also another thing. Now, I don't play replay mode. I don't do replay mode. As my student, they will tell you, we analyze live, reject it. It is, we learn. It doesn't go well, we learn. That's just what we do. Now, let's look at channels and trend on the chart real quick. So we can see that price start moving from here, created a low, created a high, but this high never gets to the previous high, created a low, created a high, uh, created another low, another high, another low, another high. But this high never gets to this highest level, create another low, another high, another low, another high. Currently, this market didn't create a new high yet. But whatever high it creates, if this high comes here and we get a rejection candlestick, then there is a probability that this market can give us something like this. Come back here to give us a new low that is higher than this previous low. Then we can then confirm that we are going to expect an up movement. So if market did this and give us a rejection candlestick, maybe bullish engulfing candlestick, harami candlestick, piercing line, tweezer bottom, hammer, or long-legged doji with a bullish candlestick, we could be considering morning star and expect price to move, targeting this particular previous high as take profit, or this particular level as take profit. It means that on the long run, if this particular area reject price and then this particular area also reject price as a support, this acted as a resistance. This place may or not become a resistance also. Okay? So basically, this is how we draw the projections, and we will build on it as we grow. I'm very sure that most of you here that will stay from the beginning to the end of the session will definitely become traders, and we will help you grow at the end of the day. All right. So the topic for today is time frame candlestick part one, introducing you to what candlesticks are, support and resistance. We treated channels, trends, levels. We are going to deep dive. Um, Today is Tuesday. So Wednesday, sorry, on Thursday, we'll be doing risk management, how to set take profit and stop loss, how to do or set pending orders. We'll be looking at some of these interesting topics. Risk management is kind of a little bit of theory, and I want you to make all the notes you can, understanding the money management principles, psychology, emotion, managing emotion, how to plan your trade very well, how to develop trading plan, and put your trading as a business. You put your trading as a business. All right, so we're going to end it here for today. If there's any question, you can please raise your hand and ask, or um, type it in the chat box and I'll give you an answer. I hope it's a time well spent with you guys tonight. And then once the video is uploaded, I will share the link so you can go back and rewatch it. And I'm very sure that if you watch it as many times you can, you should be able to grab the concept a little clearer as well. Thank you so much, guys. If there's any question, let's take it. And then by 5 minutes, we call it a night. Any question?